You should never ignore a notice of levy, a notice of federal tax lien, or any other notice or demand from the IRS. You do so at your peril. One way to respond is to request an installment agreement.
There are basically two types of installment agreements. The first is an ordinary installment agreement. The second is a partial payment installment agreement. At its heart, an installment agreement is essentially an agreement between you and the IRS in which the IRS agrees to suspend collection while you pay the balance. In the case of an installment agreement, in full. In the case of a partial payment installment agreement, it's an agreement where you agree to pay to the extent of your ability to pay in monthly payments. The objective of both is to avoid seizure of your income or assets by the IRS. An installment agreement is one of the simplest and easiest ways to prevent liens, levies, or loss of your assets. At its heart, an installment agreement is a contract between you and the IRS. You agree to make regular payments toward your liability, and the IRS agrees to suspend collection while you pay. Under a full payment installment agreement, you agree to pay the full amount of taxes, penalties, and interest, but at a specified amount on a monthly basis. Usually the IRS will demand that you pay for a term of 60 months or approximately 1/2 of the remainder of the statute of limitations. Ordinarily, your payment amount is simply the total amount that you owe divided by the number of months that you're going to pay. That's a full payment installment agreement. Under a partial payment installment agreement, you agree to pay an agreed amount based upon your demonstrated ability to pay. In other words, how much you can afford to pay. And you pay that amount for the remainder of the statute of limitations. The total amount you pay is how much you can afford to pay on a monthly basis times the number of months remaining under the statute of limitations. The amount you pay is determined by a means test. A means test is based upon national and regional standards which cap your expenses. So it's the lesser of the amount you actually spend or the national or regional standards. The total amount you pay is simply multiplying the monthly payment times the remaining months under the statute of limitations. The statute of limitations for collections is ordinary 10 years or 120 months from the date the taxes are assessed. Now the date assessed may not be obvious. It's a date that the IRS takes your tax return, processes it, and then assesses the tax. That's the beginning of the statute of limitations. Normally, the only way you can find out the exact date that the tax were assessed is to get a copy of your transcript. On the transcript, it will note when the tax return was filed and when the tax return was processed and the taxes were assessed. That begins the running of the statute of limitations. Under either or both installment agreement, whether partial payment or full payment installment agreement, you must remain compliant for the full term of the installment agreement. By compliant, that means you must file all tax returns when they become due, and you must pay all taxes as they accrue, including any estimated taxes. In addition, during the period of the installment agreement, the IRS will likely seize any refunds to which you might be entitled. It will apply those refunds toward your installment agreement. Finally, the IRS will routinely require you to make a full and complete financial disclosure of your assets, your income, and your expenses. It'll want copies of your bank statements and other expenses for the 36 months preceding the installment agreement. A partial payment installment agreement can give you a tremendous benefit by reducing the total amount you pay. You pay only based upon your demonstrated ability to pay. But both a partial installment agreement, payment installment agreement, as well as an ordinary installment agreement can both prevent levies or other collection activities that could damage your credit and your ability to earn and make a living. But neither can ordinarily prevent a federal tax lien. In fact, in the case of a substantial liability or multiple years with tax liabilities, the IRS will often record a federal tax lien even when you have an installment agreement. It will defer other collection activities but will record its installment lien. However, that lien will be released once you complete either of the installment agreements. For tax liabilities of less than $25,000, you can often negotiate those over the telephone. For liabilities of $25,000 to $100,000, you can also often negotiate those with a written application. However, for any tax liabilities in excess of $100,000, the IRS routinely requires a complete financial disclosure using a Form 433A or a Form 433B and all the supporting documentation. There are other options. There are offers in compromise. There's even bankruptcy. For more information on those options, as well as more information on installment agreements, visit our website. But to be sure, never, ever ignore a notice from the IRS. Each year, one or two taxpayers come to me and they fail to respond to a final notice of intent to levy, a lien, or some other notice from the IRS. And as a result, they miss their best opportunity to try to resolve their tax liability at the best price and with the least trouble. Please, don't ignore any notice from the IRS. If you don't come to us, go to some qualified professional that can get you the help you need. Can you negotiate your own installment agreement? Sure, you can. However, in most cases, you're far better off having a qualified, experienced professional on your side. And a qualified professional will know the ropes, will know the ins and outs, will be familiar with the standards, will know the process, will have negotiated agreements previously. It is a huge advantage to have a qualified professionals. The standards are unfamiliar to you. The procedures are not familiar to you. In every case, you're better off with representation. I urge you, whether it's us, with Britton Associates, or someone else, get the help you need.
If you receive a notice from the IRS, you have options. One is an installment agreement. Protect your assets and income. Contact Britton Associates or another qualified professional for help.